barring all the attention which seems to be garnered by Reliance and Jio Financial Services, there's the rest of the market that is trading for this morning.
They timed it well, right? Our show opens at 10 and they planned the listing at 10.
Absolutely.
So I think
we are disruptors, they are disruptors, we all disrupt.
But yeah, I think the Monday morning had a fairly decent start to the market. In fact, broader markets were up about 0.2% or so. Sensex, Nifty both up 0.2%. Where is this coming from? I get a feeling that this is largely coming on the back of GQG upping its stake from about 4.9% to about 5.03%, this time in Adani Ports. So GQG unrelenting there. Last week we had done the story of GQG investing in Adani Power and upping its stake, picking up about 7.7% or so. This morning news coming in last night, in fact, that even Adani Power, Adani Ports and Adani SEZ is now seeing GQG up its stake to over 5%. And that has driven the Adani Ports as well as the Adani Enterprises stock up this morning. In fact, up almost 1% or so when we last checked at about 9:40 a.m. this morning. And I don't know if you can pull up those graphics. There seems to be some problem with the graphics engine.
We'll check with Gaurang as to before going to the broader markets, Kartik, let's just quickly get a check with Gaurang. Gaurang, talk to us about the opening that the Sensex and the Nifty has had and what has happened with the Adani stocks first thing this morning, the only other big action apart from Reliance Jio Financial Services.
So, well, firstly on the markets, Krishnakumar, well, I think it's going to be a consolidation. I think this view we have put out about a fortnight back on the markets that we normally put out our view every Monday morning. And our sense is that this week too, and maybe possibly for couple of more days, you are going to see consolidation in the market. 19,200, 19,300 looks to be like a zone where you do see some buying coming in. At least that is what the data tells us over the last 2 weeks or fortnight. 19,500, 600 is the level where you start feeling a little bit top heavy. Short to medium term traders come and want to book out profits, and then you see a little bit of correction again on the downside. So what I'm trying to say, Krishnakumar, is that this is going to be a brief period of consolidation for the markets, and I'm glad that the market is consolidating the way it is. And it is, historical data tells us whenever the markets, Indian markets, Sensex and Nifty has made an all-time high, they do go into a brief period of consolidation. And why this is good, Krishna, is because it makes a very strong foundation for the next up move to be withstood and possibly have the strength of even going much more higher and making an all-time high. So I'm quite happy to see this consolidation. And possibly we may spend some more time in this zone before making our next move.
All right, Gaurang. So basically, it's like we can take inspiration from the markets. Just because you're consolidating at a given stage doesn't mean you can't fly any higher. Maybe you're consolidating well so that you can fly even further than what you thought before. Great signs this morning. But we'll take it up from broad markets. Kartik talking to us about GQG and their investment in Adani. Last week it was Adani Power. This week it's Adani Ports and SEZ. For the morning, Adani Ports stock up in the green. Adani Enterprises stock up in the green.
Well, so I would not give a specific comment on buy, sell and hold, but the entire group is, since last couple of months has been on news on, depending upon the news, which way the news is, the stock moves come through. Well, if it's good news, you will see an up move. If it's a bad news, you will see equally underperformance for the entire Adani group of companies. So one will need to possibly just, fathom this out, Krishnakumar. I would not, we are not in a position to give any kind of a decisive buy, sell or hold since we don't have a coverage and we have to go by the regulation that has been put in place. So, if you have that kind of risk appetite and fathom the volatility, then you can take your own call depending upon what rationale you kind of draw out of it. But no specific comments on Adani Group of companies. So, and I feel it's more of a news-driven kind of a sector.
Right, Gaurang. So I think, let's avoid a specific buy, sell, hold on Adani right now. Right. But what does it tell you about the mood of the investors, both retail investors as well as institutional investors like GQG? Wherein is there a price correction right now? We've seen, of course, the Jan peaks of all Adani companies had fallen down significantly and they still continue to be flat. So what does it tell us about the mood of the investors? Are they likely or hoping to pick up the correct valuation in Adani stocks right now, ahead of SEBI's disclosure to the Supreme Court end of this month. Are we looking at a scenario where the correct valuation or a more sort of mouth-watering valuation is being picked up right now in the hope to be able to sell it on the day of SEBI's hearing in Supreme Court?
Well, Kartik, so whenever, I mean, not only Adani group of companies, but whenever any corporate house, there is a overhang like this, and the matter has reached the courts, until and unless you have a decisive outcome of this particular, case which is there in the court, I think there is going to be a choppiness and an overhang on the stocks as well as the corporate house. In terms of your other question, where do investors find value? Well, in situation like this, it's very difficult to find the value because, like I mentioned, the stocks move on news. So, and there is no denying, I mean, Kartik, that at post that particular Heidelberg report and the kind of correction we saw and the sharp sell-off, etc., there were people who were wanting to go and buy into it, wanting to take that kind of a risk. Now, that's what exactly I said. If you have that risk appetite and if you are able to fathom the volatility that these Adani group of companies throw at you, then you can decide and take your own call. But very difficult to pinpoint a valuation since the matter is in the court and there is a lot of news that comes through, possibly, every second day or something like that. So very difficult to point out a particular level wherein you will say that, yeah, this level is good enough or comfortable enough.
Okay, and Deloitte quitting as the auditor
Yeah.
of Adani Ports and SEZ specifically, the company in which GQG has upped its stake today. I don't know what to make of it, honestly.
Two opposite pieces of news. First, when we heard the Deloitte news, we thought that this was the worst piece of news to hit the Adani group.
And it did. And it did hit the Adani stocks as well.
Too. Since Hindenburg report came out, this was the worst drop that the Adani stocks faced since the Hindenburg report came out. When news came out that Deloitte has quit Adani Ports and SEZ, and which means that it has quit the Adani group completely. That is the last company it was the auditor of, and it completely exited the Adani group, and that was the worst piece of news to come and hit the Adani stocks. And today, Gaurang, we have GQG Partners upping stake, and that same stock up in the green, and that news also pushing Adani Enterprises up in the green. What are we supposed to make of these conflicting developments?
This is what exactly I said, the kind of news flow that is there. Now, Deloitte quitting Adani group companies did not go down well in the market, and of course there was a little bit of anxiety in terms of possibly fathoming out the reasons why they possibly did that. Post that, you have GQG coming in and raising stake. So it's all about what kind of conviction you have. Maybe somebody knows a little bit more than what you and me or I know about, but given the kind of choppiness and volatility, I'll again, a word of cautious is always better. But like I mentioned earlier, unless and until you have a decisive outcome from the court in terms of the judgment that the court is going to pass and the series of news flow, either good or bad, positive or negative, dies down, I think you will see a lot of choppiness and volatility in the respective companies of Adani Group.
Okay.
Right, Gaurang, we're going to move away a little bit from the Adani Group. We've discussed this threadbare this morning, but we need to talk about another thing that happened essentially over the weekend and clearly showing itself up in the stock markets. In the stock this morning, on Monday morning first trades, Titan stock up in the green, stock in action. Gaurang, what an acquisition! One of the biggest that Titan has ever seen. One of the business that the business has ever seen, the sector has ever seen. What do you make of Titan stock? We know about this stock, the much storied stock of the late great market icon, Mr. Rakesh Jhunjhunwala.
Well, absolutely.
And the sustained investment in Carrot Lane. I think that is the development over the weekend, right? Yeah. Carrot Lane stocks being Titan, in fact, upping its holding in Carrot Lane. I think Adani just keeps coming back.
So Titan upping its stake in Carrot Lane, making the overall total investments one of the biggest in the entire space per se. What is your thoughts on the Titan stock, the way it is this morning and the way forward?
So, disclosure first, Krishnakumar, that we have a positive coverage on Titan. We have a buy recommendation. And we've been maintaining this buy recommendation for quite a long period of time. Extremely excited about the current businesses they have, whether it is gems and jewelry, whether it is wristwatches, whether it is eye care, or whether it is the accessory business. With Carrot Lane acquisition and the kind of price that they have paid, I think this only goes to show the kind of conviction that the management of Titan company has in terms of they were where to focus and where they want to take their business going forward from here on. So my sense is, and of course, CaratLane is quite a credible name in the high-end gems and jewelry segment. And I was listening to the commentary from the management a while back on this particular acquisition, and they are extremely confident in terms of the price that they have paid, the acquisition that they have made, and how they want to take it forward from here on. So my sense is that it will do definitely a lot of value addition to the existing business that they are in.
All right.
So typically, Gaurang, how does this move from here? What happens at CaratLane? I believe the founder CEO of CaratLane has already exited and is likely to launch another startup in the gold business itself. Now, what happens at the management of CaratLane? Do we see a full-fledged management change? Are we going to see Titan management come take over the corner offices, or is there going to be a fresh infusion of talent from outside?
Well, I think it will be a slow and steady takeover in terms of the management. It will be a work in progress. It's not going to be anything that want to disturb the business or hurt the sentiments. And I'm quite sure that over a period of time, you will see, the transformation coming through or the transition coming through. And like I mentioned, with the kind of reach that Tanishq has in terms of the dedicated standalone stores that they have. My guess would be that a mix of both these, that is CaratLane as well as Tanishq, should augur well. Not to forget, we are approaching festive season, so you are going to see a lot of positivities in terms of numbers coming through.
Right, Titan stock is usually up during the festive season either way, I think, because of the kind of sales, watches to jewelry to everything. Right, the only thing I want... Huh? Right. The only thing we missed out mentioning was the fact that after this acquisition, it's a full acquisition by Titan of CaratLane. CaratLane valuation is $2 billion at the end of this acquisition, and Titan buying out essentially a promoter stake of CaratLane. But moving on, away from, again, individual stocks and actions we've been discussing all this morning, Kartik, talk to us. Something big has happened with the broader markets. Foreign portfolio investors have pumped in so much money like never before, and they're continuing to.
So 8,400 crore rupees invested, net inflows by foreign portfolio investors in the first 18 days of the month of August itself. Between 1st to 18th of August, 8,400 crore rupees has been the net inflow by FPIs, and this trend, Krishna, has actually been sustained right since the month of March this year. So March, April, May, June, July, 5 months we've seen net inflows, in fact, in excess of almost, in fact, last 3 months, in excess of 40,000 crore rupees per month. Now, the only time we saw FPI pull out of the Indian markets was in the month of Jan and Feb this year. After that, since March, this FPI inflow rally has continued. Now, this is coming again on the back of course, global uncertainty when it comes to US and the broader economic scenario in the US. China, of course, we can never leave China out of any discussion on the Indian economy or the Indian markets, on which it has a very direct impact. So, low confidence in global economics, very low confidence in China, and strong fundamentals of India have continued to see FPI inflow for the 6th month straight, at least up until now, on the 21st of August. So, good news coming there, except I want to understand from Gaurang, if he's still around with us, that an average of 40,000 a month inflows for the last 3 months, and this month up until the 18th of August, the number is looking a little small at 8,400 crore rupees. Gaurang, what does this tell us? Are we on track for foreign portfolio investments coming into India?
I have no doubt about that, Kartik, to be very honest. And with the kind of positivity that India has compared to the emerging markets or even China. The problem with China, Kartik, is that how much of the news flows that comes through China has the authenticity or has the credibility. One needs to be a little bit careful on that particular front. But there is no denying that there are issues troubling that particular part of the country. And the economy is possibly going at a very slow pace. Now, whether that transforms into positive India, yes, I strongly believe about that. And post-COVID, I think China plus one, Europe plus one policy is definitely going to augur very, very well. And even if we have to, consolidate for some time and be in a range, I don't think that's going to go as a negative for large investors, because they come into emerging markets like India from a long-term perspective. If you have look at the data points, I'm not denying at all, Kartik, that in the short to medium term, because of deficit monsoon, high crude oil prices, depreciating rupee against the dollar, and the inflation, these are some of the worries that may trouble us from short to medium term. But if you're not looking at next 3 to 6 months, and if you're looking at the next 12 to 18 months plus kind of a time horizon, then I think you should definitely allocate more capital towards equity market investment. And I wouldn't be surprised if you see more number of FPIs coming into India and want to become a part of this growth economy.
More can be expected. That's the word coming from Gaurang Shah. Gaurang, thank you so much as always for taking time out this morning to help us understand and decode all that's going on in the stock markets and what we should be doing to get all that news. Thank you, Gaurang, for being with us this morning.
Thank
as
you, Gaurang.
always.
Have a wonderful trading day ahead.
Yes, have a wonderful trading day ahead, and
you.
hope to see you soon again on the show as soon as we can get you back, that is.